Hello everyone. In this video, I'm going to walk you through the body of chapter 11, and in this chapter we'll be continuing our work on the designer company in the body of the chapter, and we're going to be first moving the accounting period forward to November. We'll record a series of transactions for November, including checks, deposits, and ATM withdrawals again, and then we'll repeat that process for December. After entering those transactions, we'll complete bank reconciliations for both months to make sure the company's checking account records in Sage match the bank's records. Then we'll go through the end of period adjusting entries that need to be made before preparing the financial statements. Once those adjustments are complete, we'll generate those financial statements, and then we'll close the fiscal year in Sage and create a post-closing trial balance to verify that everything carried forward correctly. Finally, you'll get a chance to practice the same steps in your end of chapter exercises, this time using the Crafts by Your Name company. So let's get started by getting into the Your Name designer company and setting the accounting period to November. And I'm on the landing page of Sage here, and if you're using your own machine or a loaner laptop, you want to click on Open an Existing Company and then find your designer company looking at the time and date stamp, probably going to be the one at the top here. If you're using one of the virtual machines, then you're going to go to File and then Restore, and then look on the J drive for your backup that you had saved there from the previous chapter. So I'm going to click on Open Existing Company though, and select my designer company and click OK. So once again, before you get started with the work, make sure that you're looking at the correct company. So look at the top of your Sage window here, make sure that it's showing Your Name Designer Company. And then once it is, then we can start doing the task. So the first thing we're going to do is we're going to change the period to November. So I'm going to double click up top in the right here where it says period 10, October's dates. Double click on that. I'm going to change that to the 11th month of the year, November, and then click OK. And then it gives me a prompt here. I don't want to print anything, and I don't need to run an internal review. So now up top it shows period 11, dates in November, and I'm ready to start recording the transactions. So in this chapter, like I said, we're going to be recording transactions for November and December. We're doing bank recs for both of those months on the checking account, and then we're going to basically work through the accounting cycle. And page 338 has a sort of a reminder of the accounting cycle there. This should remind you of your Principles of Accounting class that you've taken previously, but we're going to go through that whole accounting cycle within this chapter. So to get started with the transactions, we are taking a look at page 341 and 342. There's a table of transactions similar to the table that we had for the last chapter. All of these transactions are either going to involve the write check screen or the receive money screen, depending on if the amount shows up in the payment column or the deposit column. And the first one that we need to record on page 341 is the one on November 3rd, and it is a deposit. So that's going to go on the receive money screen. Several ways to get there. If you're on customers and sales, you can click receive money and then receive money from a customer. So we're going to enter the date as November 3rd and then put that in for the deposit ticket ID as well. For the name, once again, we normally put the publishing company. We're just going to type in Book Royalty there. And then also for the reference number, I'm going to type Book Royalty there as well. And we type in that amount, $2,455.85. And then down below on the Apply to Revenues tab, we need to make sure that this maps to the correct general ledger account. So I click on that magnifying lens, and this is for book royalties. So I have an income account for that, royalty income, account number 4050. Make sure your details match up on the screen here, and then save. After I hit save, the screen clears. I can close out the window. So then on the next page, 342, the first transaction in the table is an ATM withdrawal, and that's going to be recorded on the write check screen. So if I click on the banking area from the navigational menu up top here, I've got a button for write checks. I'm going to select that and then new check. So from here, I am going to put ATM for the name, and then for the check number, the book says to use ATM, but that's going to give us an error message. So I'm just going to put a number at the end of it. I'm going to type ATM2 because I've already used ATM a couple of times. And then for the date of this one, it looks like it's November 5th. So we'll select that. And then the amount of this withdrawal was $200. We'll type that in. And then the account that we specify for the expense account is not an expense account. It's a owner's drawing account. It falls into the owner's equity category, and it's account number 3930, your name, comma, draw. And once your details match up there, make sure to save the transaction. It'll clear out. And then the next transaction is a deposit. So I got to close out of this window and then go back to the customers and sales, or if I go to tasks, I can find receive money there. And now I can fill out the details. So this deposit was on November 6th, so I'll change the date. It was from Milwaukee Community College, so I'll type that in for the name. For the checker reference number, we're going to type the word deposit. I might get a little warning because I think I may have used that in the past, but we'll find that out in a minute. And then down below, I need to make sure this maps the correct account. This is coming from Milwaukee Community College, so the source of income is teaching income, so I make sure that's selected. And then I can just type the amount in the amount field. It's $2,716.19. And then I can put in the deposit ticket ID is the date, so that's 11/6/19. And then I think we're ready to go, so we'll see if we get an error message with that reference number. I'm going to click save, and I did not, so I'm going to close out of the window. And then it looks like the rest of the transactions on the table on page 342 are all in the payments column, so they're all going to be on the write check screen. So to get back to write checks, make sure on the banking area from the navigational menu, got write checks here, new check. So then we'll enter all the details about this check. So the check number per the book in that table is 4014. And I've entered the amount, and the name of the check was to the Water and Power Company. And since it's to them, I think we're supposed to realize that it should be charged to a utility expense. So I go down the list here. And actually, I have a specific water and power expense, so I'm going to use that. And then I'm going to save the transaction to post it. But before I do, I need to make sure that I enter my date correctly, and it's not correct, so I need to change that to November 11th. And the reason why I noticed that before I hit save there is I was seeing that the balance of the account wasn't matching up with the running balance in the books. Now if I hit save, now that balance is matching up with the running balance in the table after that check on November 11th. So my next check is check number 4015. It is also on the 11th of November. Change the date and then put in the other details from the book. So I've got the name in there, I've got the amount in there, and now based on the name, it was RVP gas. So I'm going to find an expense account that's appropriate. And when I was trying to think of the appropriate account, I wasn't sure if they had a specific, natural gas or something like that expense. So I referred back to the prior chapter to see what they had done for RBP gas then, and I saw they charged it to utility expense. So I selected that, and now I'm going to save it. Our next check is check number 4016. I'm going to enter the details per the book. It's on November 12th. So I've got the amount in there, I've got the name, it's paid to the local telephone company. So now I'm going to find the appropriate expense for that local telephone. And there it is, telephone expense, account number 6,500. Once I got all the details matching, save the transaction. Our next transaction is check 4017. It occurred on November 14th. And then we're going to enter all the details from the book. So I've got the amount in there, I got the name, it was long distance company, so we had a specific expense for that. So I find that in my list, it's account number 6,550. And once all the details match, I save the transaction. Our next transaction is an ATM withdrawal, so we're going to clear out the check number. We're going to type ATM. We've already used ATM2, so I'm going to use ATM3 for the reference here. I'm going to type in ATM for the name. And then the amount was $200 even. And then the account that we specify is going to be that owner drawing account. So look for your name, comma, draw, account number 3930. Once all the details match, we'll save that one. Our next transaction is a check, so I'm going to clear out the check number, type in 4018. The date of this one was November 27th. And I just realized that that ATM transaction, I entered the incorrect date. I didn't update it, so I'll need to go back and change that, but I'll save that for the end. And it looks like this transaction is a Visa card payment. So I'll enter the amount, put that in Visa for the name, and then I'll have to think about the expense account carefully here. Since we're paying off our Visa card payment, I remember when we set up our chart of accounts, we had a Visa payable account and there was a balance in the beginning balances. So now we're paying that balance off, so I need to find that in my chart of accounts here. And once again, it says expense account, but it's really not always an expense account. A lot of times it's an asset, or in this case a liability that we're paying right in the check for. So expense account's misnomer. It should be offset account really here is labeled, but that's just my opinion. So here's the account number 2000 Visa payable. That's the one we're paying off here. So make sure all these details are matching up and then save the transaction. Looks like we have another check, 4019. We'll enter the details from the book. Got the amount in there, got the name. Since we're paying the internet service provider, we have an expense account for that in our list. And let's see, it's account number 6560. Make sure all your details are matching up and save the transaction. And then the final transaction from the table at the top of page 342 is an ATM withdrawal. So for the check number, I'm going to type ATM 4 because I've used ATM 3 just a moment ago. And the date of this transaction was November 28th, so I changed that. And then I'll enter the details. So it was a $200 withdrawal. I put ATM for the name, and then for the account, I'm going to find that owner drawing account number 3,930. Select that, check all these details, and then save the transaction. And when I'm done here, this balance that I see for the cash account balance, $21,656.33. That matches the screenshot in page 342 of the book. So we're good to go there. I did make 2 day errors in the transactions because I was hurrying, and now I'm going to go in and correct those real quick. So to do that, I'm going to close out of the Write Checks window, and I'm going to go to Reports and Forms. I'm going to go to the General Ledger category, and I'll run the General Ledger report. And what I'm looking at here is the transactions and the dates. I'm going to make sure that the ending balance matches the table in the book, and all the dates and the check numbers match the book. And I am aware of 2 mistakes. So one was on this check to the internet service provider per the book that was actually on November 28th. So I'm just going to double click on that one and change the date to the 28th, and then resave it and close out of the screen. And then the other error was on this ATM withdrawal. I have it on the 14th, but it's actually on the 16th. So I'm going to change that date as well and resave it, close out of the screen. And now if I refresh, all the dates and all the details should match up, other than we had to do the reference numbers for the ATMs a little differently so that we didn't get those error messages. So now in the book, they provided us with a bank statement for the month of November. So we're going to reconcile our checking account against that bank statement. So I'm going to close out of this report as well as the report chooser. Make sure I'm on the banking area from the navigational menu, and then I'm going to click on the reconcile accounts button. I'm going to make sure that we're reconciling the correct account by clicking on this magnifying lens and selecting the checking account. I'm going to maximize the screen so I can see it a little better. If this pane isn't showing the service charges or the interest income, you might have to click this little arrow to make that show up. You want to be able to see that. First thing we're going to do here is we're going to enter the statement ending balance from the bank statement. So we look at the bank statement on page 342, and we can see the ending balance was $26,926.97. So I type that in. We also see on that bank statement that there is a service charge on it on page 342 of $10. So I'll enter that. And then we need to map that service charge to the correct account. So we're going to go down the list here and find it. And we have one. It's 6,850 is our account number there. So we can see on the screen that there is quite a bit of a difference between the balance per the bank statement and the balance per the records in Sage. So now we're going to go through and compare those two sets of records to see why there is a difference. So if we look at the bank statement, which is on page 342 and 343, it's broken into three sections. We got deposits, checks, and other deductions. So right now we're going to focus on the deposits. In Sage, there's two of them. If we compare those amounts to those that are on the bank statement in the book, they match up. So we're going to put check marks next to them. And then we go down the list of the checks. So we had this check number 4005 that was outstanding at the end of last month, and we see if it's cleared, and yep, it has. It's on the bank statement. The amount matches. We're going to check it, and we just worked our way down the list numerically. So the next check on the screen right now is 4011. That appears on the bank statement at the same amount. Same thing for 4012, same thing for 4013, 4014, 4015, 4016, and 4017. However, 4018 and 4019 are not on the bank statement, so those appear to be outstanding. So now that we've looked at those, now we're going to look at the ATM withdrawals. There are three of them on the bank statement. There are also three of them here. The amounts and dates look like they match up, so I'm going to check all of those. And now here's the moment of truth. I look down here in the bottom and I look for this unreconciled difference to show as 0. If it's not 0, I'm not done, and I do not click OK on the screen because that saves it. It's not done if it doesn't show 0. I either figure it out or I just close out of the screen and don't save it if I don't get a 0. I want to see that green check mark and I want to see a 0 there. So once we do see that, we've reconciled the bank statement for that month, and now we can save it. So we click OK now. So now we're going to transition over to the month of December and enter transactions from that month, and also prepare a bank reconciliation once we've done that. So to start that, we're going to change the accounting period up top in the right. We're going to double click on where it says period 11 and change that to period 12, December. Click OK. And we're going to get a couple prompts. We don't need to print, and we don't need to run an internal review. So now that we've done that, we're seeing period 12, December's dates up here, and we're ready to record a bunch of transactions. The transactions that we are recording now are described on a table on page 353. They are once again all transactions where we're either going to use the write checks window or we're going to use the receive money window. And for all the payments, it's going to be write checks. And the first transaction we need to record is the ATM withdrawal on December 3rd for $400. So that's going to show up in the write checks window. So make sure you're on the banking area. From the navigational menu, select write checks, go to new check, and then enter those details. All right, so I've entered the amount of $400, the date of December 3rd. For the check number, I wrote ATM 5, so I avoided getting an error message for redundant ATM reference number. For the name, I typed in ATM, and for the expense account, once again, it's not an expense. The owner's withdrawing money for personal use, that reduces their owner's equity, so I'm selecting this owner's name, comma, draw, account number 3,930, and I'm saving the transaction. Our next transaction on the table on page 353 is a deposit. So I need to close out of the write checks window, and from the task drop down, I'm going to select receive money, and I'm going to enter the details here. So I've entered the date of December 8th. I've typed in Milwaukee Community College for the name. I typed the word deposit for the checker reference number. And now I'm going to specify the general ledger account. This is coming from Milwaukee Community College, so the source of income is teaching income. Make sure that's selected. And then I'm going to click in the amount field, and I'm going to type the amount, $2,716.19. Making sure this is depositing to our checking account and showing up as teaching income. It looks like all the details are good, so I'm going to save the transaction. The remainder of the transactions are all showing up in the payment column, so they need to show up on the write checks window. So I'm going to close out of the window I have open, and I'm going to go to banking area of the navigational menu, select write checks, and then new check. So the first check that we're writing is check 4020, and then I'm going to enter the details from the book. So I've got the amount in there. The check is to the water and power company, so I entered that for the name, and that's supposed to inform us as to which account to charge it to. And we do have an expense account for water and power, and there it is, account number 6,420. We select that, and then we can save the transaction. The next check number has auto-filled, and now I'll enter the details for check 4021. So I've entered the amount. The date remained the same at December 11th. The name is RVP Gas. Based on that, we're supposed to select the correct expense account. We didn't have one that was specific to this utility, so we're going to go with the generic utilities expense, account number 6,400. Make sure all these details match up and click Save. So our next check, 4022, we're going to type in the details from the book. So the date did change, is December 12th. I typed in the amount. The name, I typed in local telephone company. From the expense list here, we do have one for a telephone expense, account number 6,500. We select that and then save. Our next check, 4023, it looks like for this one, we have all the details in the book, so I'm going to type them in. So I entered the date. It was a different date, December 15th, the amount, and then the vendor that we're paying is called Your Gallery. This is a new vendor, so I didn't know which account to charge, but it says in that table to charge the supplies account, account number 1,450. Check all the details, then save the transaction. Our next transaction is a check. It's 4024 is the number. We're going to enter all the details from the book. So the date changed, is December 18th. The amount was entered, and then it was for long distance company, so we do have a specific expense account for that. It's account number 6,550, and I'm going to check all the details. They look good, and then save. And then we have check number 4025. We're going to enter all the details from the book. The date remained at December 18th, entered the amount. The name was Internet Service Provider. We have a specific expense account for that. It's account number 6,560. Once again, check all these details and click Save. So now we're down to the last two transactions. They are both ATM withdrawals. So I'm going to go up here to the check number and I'm going to type ATM withdrawal. And I forgot which number we used, but I don't think we used 6 yet, so I'm going to go with that. And December 19th is the date of this first one, so I'll change that and then enter the rest of the details. So I've entered the amount of 400, the name ATM. For the account, I'm going to find that drawing account number 3,930. Verify all these details are matching up and then save. And then our final ATM that we're going to record here, it auto numbered to ATM 7, so we're going to go with that. The date was December 29th, and then we'll type in the details from the book. This one was also $400, put ATM for the name, and then I'm going to find that drawing account. It's account number 3,930 again. Check all these details for the last time and then save. And now that's our last transaction, so I can close out of this window. Now I'm going to go to reports and forms. I'm going to take a look at my general ledger report. And when I look at that, the detail from the table on page 353 should match up. We should have an ending balance of $22,717.47. If it doesn't match up, check out the amounts and figure out why. Check all the dates, check all the check numbers and other references, and make sure that your details match this one. My details match the book, so I'm going to close out of this window and the report chooser, and now I'm on the banking tab again. I'm going to reconcile accounts. I'm going to make sure that we're reconciling the checking account, maximize the screen, make sure I can see the details at the bottom with the interest, income, and service charges. If not, use these arrows to expand it, and I'm going to enter the statement ending balance from the bank statement. And this bank statement starts on page 353 and continues to page 354, and it looks like the balance is on page 354, $22,737.46. And also I can see from that bank statement there was a $10 service charge, so I'll enter that, and then I'm going to map that to the appropriate expense account. We have a bank service charge expense. It's account number 6,850, so select that. So now we're looking at the bank statement and comparing the deposits and checks and ATM withdrawals. There was only one deposit on the bank statement. There's only one deposit here on this screen. The amounts and dates match up, so I'm going to check the box next to it. Then I'll work my way down the list. The first check in the bank statement is 4018. The amount matches up, and just working my way down, 4019 matches up, so does 4020. 4021 matches, as does 4022. As does 4023 and 4024. 4025 is not on the bank statement, so that's an outstanding check. And then on the bank statement, there are 3 ATM withdrawals, all for $400. That's what we see in Sage here. The dates and the amounts are matching, so I'll check those details. And then I come down for the moment of truth, and I look and see, does the unreconciled difference show a 0? It does. I've got the green check mark. Now I can save this reconciliation by clicking OK. So now that we've recorded all of the transactions for the quarter for October, November, and December and completed the bank reconciliations for those months, our next step to produce financial statements is to prepare adjusting entries at the end of the period. Adjusting entries are important because they make sure the company's financial statements reflect all the revenues that have been earned and all the expenses that have been incurred during the period, even if the cash hasn't changed hands yet. They help bring the books up to date by recording things like depreciation, the use of prepaid expenses, and accruals. Without these adjustments, the financial statements wouldn't present a complete or accurate picture of the company's financial position or performance. So now we're going to enter the adjusting entries that are provided by the book, and we'll show how those adjustments affect those financial statements. So the adjustments are described starting on page 358 of our book, and the first adjustment that we need to make relates to our supplies account. So to help us with the adjusting entries, what we're going to do is we're going to run a trial balance report. So I'm going to click on Reports and Forms drop down. I'm going to select General Ledger category, and then I'm going to run the General Ledger trial balance report. So we can see here that we do have an asset account called supplies, and prior to adjusting entries, it has a balance of $2,103.06. So that's the unadjusted balance of supplies. So at the end of the period, we need to ask ourselves, do we have that amount of supplies remaining? And the way that we would test to see if that was still true is by taking a physical count, an inventory of the supplies that remain. And we did that. Per the book, we have $1,700 of supplies remaining. So we need our supplies account to have that balance. So to visualize this, I made a T account. And in this T account, since it's an asset, that balance prior to adjustment would be on the debit side. We can see that on the trial balance as well. So I put that here, the unadjusted balance, and then I drew a line representing the equal sign, because we got to do some math, and we want the account to have an adjusted balance of $1,700 on the debit side as well. So we can see from this T account that we need to subtract from the supplies account. And we have to do that on the credit side because it's an asset. Assets decrease on the credit side, but we don't yet know the amount. So to calculate that amount, we just take the difference between the unadjusted balance and the adjusted desired balance. And we can see that difference is $403.06. So that's what goes in here in place of those question marks. We now know we need to credit the supplies account by that amount to make the balance equal the correct adjusted balance. So we're going to do that in Sage now. So to do that, I'm going to minimize this report, and then I'm going to go to my task list, and from there I'm going to select General Journal Entry. And we're going to make all of these adjusting entries at the end of the quarter. So December 31st will be the date. And then we're going to put a little reference. We're going to put ADJ, and then for the first one, number 1. And then we can see here that the supplies account had to be credited. The normal practice is to list the account that is debited first and the account that is credited second. Since my focus was on the credit account, I'm going to throw that on the second line here. But Sage won't let me skip to that second line. I have to do them in the debits first, credits second order. So to do that, I am going to need to think of the other account that would be involved in this. Well, the reason why the supplies account has decreased is most likely because the business has used up some of those supplies. So we should have an account that represents used up supplies. And when we think of consumption or use, that should trigger in your mind the idea of an expense. An expense is a record of the services or assets that were used by the business during a period of time to help them generate revenues. So think of consumption or use when you think of expenses. So if I go to my magnifying lens here and scroll down to I get to my 6,000 and 7,000 account numbers, I'm going to look there for an expense account that represents supplies that were used. So sure enough, I see an office supplies expense. It's account number 6,450. I'm going to select it and I'm going to debit it for that exact same amount. By debiting an expense, we're adding to the expense. And then for this asset account of supplies, our T account informed us that we needed to credit it, we needed to decrease it. So we find that in our list. Our supplies account is account number 1,450, and we're going to credit it for that same amount. And now that we have equal debits and equal credits, the out of balance shows a 0, and now we can save the transaction. And now notice that the date remained the same, but the reference number automatically changed to AJGA2, and now we can record our second adjustment. But before I do that, I'm going to pull up that report that I had open a moment ago, which was our trial balance, and I'm going to click on the refresh button. And now once I do that, the supplies that are showing, the balance is showing at $1,700, which is the adjusted balance that I wanted. And then that expense, the office supplies expense, shows that used portion, the $403.06 showing up there. So that's reflecting that adjustment. So now they're telling us in our second adjustment, we're doing something related to our prepaid insurance. So it looks like our prepaid insurance has a balance of $2,100 in it. And per the book, we'd have to actually research this in real life and figure out, well, how many months was that representing? And per the book, that represented 12 months worth of insurance. So what we need to do is figure out, well, how much of this insurance has expired as of the date that we're preparing these adjusting entries. So if we bought the insurance on October 1st and we're preparing the adjusting entry on December 31st, we can see that 3 months of insurance coverage would have expired during that period of time. So what we need to do is value 3 months worth of insurance, because this is for 12 months. We have to figure out what's 3 months worth of insurance worth. Several different ways to do that. One way to do that is to take the total amount, which covered 12 months, and divide it by 12 months to figure out the monthly amount. And that works out to $175 per month. And then now we can multiply that by the 3 months that have expired. We do that math and we can see that $525 worth of insurance has expired. So now we need to reflect that through our journal entry, but first I'm going to visualize this with a T account. So in the T account for prepaid insurance, I've indicated the unadjusted balance, which we can see on our trial balance here was $2,100. We just talked through the math and we said that $525 worth of insurance has expired. Well, if insurance has expired, then the asset account balance should decrease. And to decrease assets, we have to place the amounts on the credit side. So in this case, we already have the amount of the adjustment. That's what we've calculated. So we can just bring that into our journal entry. So I'm going to pull up the general journal again here. Now that's the account that has to be credited is our prepaid insurance, but the system requires us to think about the account that is debited first. And once again, the reason why we're decreasing our prepaid insurance is because we used it. And when we think about the idea of use or consumption, we should associate that with the idea of an expense account. So we have an expense account to record. And since this is the use of insurance, we should have an insurance expense in our list. There it is. It's account number 6,950. And the same amount is going to be debited that we are crediting out of the prepaid insurance. Debit insurance expense for $525. And then we're going to credit our prepaid insurance, which is account number 1,300 for that same amount. And now the journal entry is in balance and I can save it. Now, if I want to update my T account here, I can see, okay, the account started with a $2,100 balance and then I credited it for $525. So the adjusted balance would be the difference of those two amounts. So if I do the math there, 2,100 less 525, that gives me $1,575. And I can verify that by going back to Sage and taking a look at my general ledger trial balance. I think mine is already refreshed, but you can click the refresh button just to be sure. And we should see that prepaid insurance showing a balance of 1,575, and then the expense related to the insurance should reflect the amount that was used, which is 525. So I go here, yep, that's what I'm seeing. So now we can go back to our journal entry screen and make our third adjustment. And once I save that second one, the reference number automatically changed and I'm ready to go. So our next adjusting entry described in the book relates to this asset account called prepaid rent. We had prepaid our landlord or someone. I guess we don't know what we were renting because the book doesn't give us context. But the book doesn't do a great job of explaining this one at all. But we're just going to assume that that unadjusted balance of the prepaid rent represented 3 months worth of rent. That balance existed on October 1st when we set up the company in Sage. So now 3 months have passed because we're doing all the adjustments as of the end of December. So basically all of this has been used. Since all of it's been used, we don't really need to do the calculation because the amount used is 600, but we can see it here. We can say, okay, the 600 was 3 months worth, so divide the 600 by 3 months gives you $200 a month. And since 3 months were used, we multiply the $200 a month by 3 months to get the $600 used. So if we had fully used it, this process would be important. It's very similar to what we did with insurance, but in this case we used all of it. So that's going to be the amount of the adjustment. Visualizing this through a T account, prepaid rent is an asset. It would have a normal debit balance. We said we've used all of it, so it should have a zero balance, which means that we needed to subtract 600 from it. To subtract from an asset, you credit it. So in our journal entry, we're going to credit our prepaid rent for the $600 amount. So I'm going to go back to my journal entry screen and record that. Now, since that's the credit account, I cannot select that first. I have to think of the debit account. Well, the reason why this is being decreased is because we used the space that the landlord provided. We got the idea of consumption or use again. So we should have an expense account for rent, and I believe that we do. It's account number 6,300 rent or lease expense. We're going to debit it for the amount used, which was 600, and then that asset prepaid rent is going to be reduced by crediting it for 600. And actually, another thing that I didn't mention earlier with these adjusting entries in Sage is that once you enter either an amount in the debit or credit column, the debit and credit rules are reflected when you see the note here. So when I debited rent or lease expense, I see that, oh, expenses increase on the debit side. Yeah, it says that because I debited it. And then this is an asset account, and because I put an amount in the credit column, it says that the account will be decreased. So it's sort of a reminder of those debit and credit rules here. But anyway, this adjusting entries in balance, it can now be recorded. So I'm going to click Save. Move on to my fourth adjusting entry. Our next adjusting entry relates to the computer equipment. We can see that this long-term asset account in the trial balance has a balance of $7,905.68. The book says that this equipment is estimated to be useful to the company for 3 years. The company also estimates that it will be worth about $1,000 at the end of those 3 years. That's its salvage value, aka its residual value. The asset was used for 3 months from October through December, so 3 months have passed, and the company was using the straight line method to calculate its depreciation. There are many methods used to calculate depreciation, but this particular asset, they're using the straight line method. So the straight line method takes the original cost and subtracts out the salvage value, and then divides that difference by the number of years in the useful life, and that would give you the depreciation per year. But here we have a fraction of a year because only 3 months out of 12 months have been used, so I multiply that result by the fraction 3 over 12, and that gives me $575.47 of depreciation for that 3-month period on the computer equipment. Now, since we are recording the use of an asset, we still have the idea of consumption, so we have an expense account to find. And since we're recording the depreciation of an asset, a long-term asset, that's what we're going to call it, depreciation expense. We see that we have 3 of them. Specifically right now we're focusing on the depreciation of the computer equipment, so we select that for our expense account, and then we use that amount that we just calculated. And then the other account is going to revalue the asset on the book. So we have a balance in this asset of the amount that we originally paid for it, but we're not going to take this amount off of this asset, which actually makes some logical sense to do that. The reason why is we have to have a separate record of the original cost versus the total amount that the asset has depreciated by over time. And we're going to use a special account called a contra asset. It reduces the related asset. So if we look at the assets, which are in the account number of 1,000 range, we see that we do have some accumulated depreciation accounts, 3 of them, and right now we're focused on the computer equipment. So the accumulated depreciation for the computer account is essentially going to keep track of the reductions in the book value of that computer equipment. We're going to credit it. So once that detail has been entered, we can see that our journal entry is not out of balance and we can save it. Our next 2 adjusting entries are going to be similar in that they both are dealing with depreciation of a long-term asset. So the next asset that we're focused in on is our furniture. We can see in the trial balance that it has a balance of $5,000. That's the original cost of the furniture. Per the book, the furniture is estimated to have a 5-year useful life, a $500 salvage value. It was purchased on October 1st, and therefore 3 months have been used. So we need to look at the method. They're using straight line method. So we do the same kind of math again, take the original cost of 5,000, subtract out that salvage value of 500, take that difference, divide it by the useful life. That would give you the depreciation expense per year, but we're not dealing with a full year. We're dealing with a fraction of a year. So we take the 3 months over 12 months and do the calculation. We can see that's $225 of depreciation for that 3-month period on the furniture. Since we're using an asset, we have the idea of an expense again with consumption. So we're going to go to our expense list and look for a depreciation related to the furniture. We found it there. We're going to enter that amount that we calculated, $225, and then we need to revalue the book value of the asset. So rather than take directly off of the furniture, we're going to use the contra asset for the furniture. So we have this accumulated depreciation for it, and we're going to credit that, which is going to reduce the book value of that furniture by $225. Once we've entered in those amounts, we can see that the journal entry is not out of balance, it's in balance, so we can save it. So the last adjusting entry is related to this automobile. We can see in the trial balance that it had original cost of $19,000. The book does not give us much detail really on the automobile other than when it was purchased, so we used it for 3 months, but it doesn't really describe if they're using straight line method or something else. But they showed this calculation with this 20%. It sort of looks like Macker's when you see that, but I think that matches a Macker's amount. So I don't really know what they did. They might have depreciated it fully because it doesn't have a salvage value, and maybe they used a 5-year life, and that's how they got 20%. Just not done very well. But really, we just need the amount, and I'm just going to roll with the $950 there. This class is not going to require you to calculate depreciation, even though I showed you it here as maybe a refresher from your financial accounting class that you took previously. You're not going to have to calculate depreciation for this class. The only adjusting entry that I believe that you'll have to do calculations for will be the supplies adjusting entry. You still will have to make these entries, but I believe the amounts will be given to you other than for supplies. I think you'll have to calculate the amount for the supplies adjustment. But anyway, here we're using the automobile, so we have the idea of an expense again. So from my general ledger list of accounts here, I want to find a depreciation expense for the auto, enter that amount that was given to us, $950. And then we need to reduce the book value of the asset. So we find the contra asset to the automobile, the accumulated depreciation right here. We're going to credit that to reduce the book value of the asset. Our journal entry is in balance and we can save it. There is another adjusting entry that we need to record, and it relates to this account called publisher advances. We can see on the unadjusted trial balance, or the partially adjusted trial balance now I guess, we see the account had a $11,000 balance, and that represented money that we had received in advance from a publisher before we did the work for them. We owed them services, so it's a liability account. We owe them services because they paid us for the services, but we haven't done the services yet. So we had to value the services that we have provided related to this advance. And per the book, the value of those services that we have done related to this advance are worth $3,500. So if we want to visualize this through a T account, this is a liability account, so it has a normal credit balance. We can see that in the trial balance there. $11,000 is the unadjusted balance. And then, hey, if we've provided some of those services, we don't owe all $11,000 worth of services yet. We need to decrease the balance of this liability account. So the $3,500 is the amount of the adjustment, is the amount of subtraction that has to occur from the liability account. So we can do the math there and get the adjusted balance, the updated balance, by taking the 11,000 and subtracting the 3,500. That tells us the account should have a adjusted balance of $7,500. So this is the services that we still owe at the end of December. So to do this adjusting entry in Sage, we're going to go back to our adjusting entry screen. Tasks, we're going to select general journal entry. And we're going to make sure the date is December 31st. And then this is our 8th adjustment. No, I'm sorry, this is our 7th adjustment. So ADJ 7 will be what I put in for reference. And then we thought of in this T account, the account that was debited. We need to decrease or debit our publisher advances. So I'm going to find that in the list. It's in the 2000 range since it's a liability. There it is. And I'm going to enter that amount in the debit column, 3,500. And I can see, sure enough, a debit to a liability account will cause the account to decrease. And then I think about, okay, the reason why this decreased is because I owe them less. And the reason why I owe them less is because I provided some of the service. Anytime a business provides services to its customer, that business is earning revenue when it provides service under the accrual basis of accounting. Anytime you provide services, you have earned revenue. So you need to add to a revenue account. So we're going to go to our chart of accounts here and take a look. And sure enough, here we have revenue accounts, income accounts, and we have different sources of income. So we want to make sure the one that we're selecting here makes some sense. And the text says, it doesn't really say what the services are, but I don't think we were teaching for the publisher. I don't think we're earning interest. I think it relates to royalty that we're going to be receiving on those intellectual properties that we created. So I'm going to select that royalty income, and then income accounts or revenue accounts increase on their credit side. We're adding to revenue because we've earned more, and the amount was $3,500. So I type that in, and sure enough, I can see that credit to an income account does cause an increase. My journal entry is in balance, and now I can save it. So now I'm done with all the adjusting entries, and now I can run the reports that I need to. Now one of the reports is already open. I just need to make sure it's refreshed, and that was that general ledger trial balance. And when you're done making these adjusting entries, it should match up with what you see on screen here, which is also what you see on the book on page 363. First thing to check is these totals. Make sure these totals match up. If they don't match up, remember that this is sort of a cumulative result of the last 3 chapters, 9, 10, and 11. So the error could come from any of the prior chapters, but if you've been checking your balances as you go with my videos, then you'll know that the error is probably coming from the latest chapter in chapter 11. So you can try to figure it out by comparing the details. But if you're balancing and matching up with the details here, make sure to create a PDF, save it in a location that is easy to find, and then give it the name that I've asked you to give it in Canvas as well as in the book. And that makes it a lot easier for me when it comes to grading, since there's going to be 6 different reports that I have to manually grade, and 2 of them are going to be trial balances. This is your adjusted trial balance. Actually, I think there's 8 reports for this chapter. All right, so make sure you save that report. So then I'm going to pull up the next report. So I'm going to close out of this one. I'm going to maximize Sage. I'm going to go to the reports and forms drop down, and then I'm going to select financial statements. And right now I'm going to pull the income statement, the standard income statement. So double click on that. Don't need to change the time frame, but I don't want the zero amount shown. So make sure to uncheck that box and then click OK. And then when you look at this income statement, make sure that first that your net income matches up with mine. This is also matching the screenshot in the book on page 365. And then make sure that common mistakes are the distribution of income between the two sources of income. Make sure that those are matching up. And then you can go through and you can check all these different expense account balances as well. And then also make sure that year to date, this is only look at the month of December here, make sure year to date matches up with what you see on screen as well. So once you've done that, make sure to make a PDF of it, name it according to the instructions in the book and on Canvas, and save it in a location that's easy to find. And then also, I need another financial statement from you. I want your balance sheet. So let's go back to the report chooser in the financial statement group. I want the standard balance sheet. Make sure that it's not showing zero amounts and click OK. And then when you look at this balance sheet, first thing to do is check your total assets, make sure those match, make sure your distribution of assets between current assets and property and equipment match up, and then check all these details and make sure all the details are matching up. Once that's looking great, make a PDF of it, save it with an appropriate name and an easy to find spot, and that's going to be submitted for this chapter as well. Now we're going to transition to the last step in the accounting cycle, which is the closing process. We're going to close out the fiscal year of this company. All right, so now to close out the fiscal year, we're going to go to Tasks, and then we're going to go down to System, and then we're going to go to the Year-End Wizard. I'm getting a little pop-up. I don't need that, so I'm going to close that out. So this screen is sort of just introducing us to the year-end wizard. We don't really make any choices here. We're just looking at the years that are open, and we are going to close these, so we'll hit next. And once again here, we're not making any choices either. We haven't messed with payroll with this company, so we're just going to go with the default of fiscal and payroll tax years are going to be closed, and hit next. This window is asking us if we want to print off anything. We don't, so I don't think anything's checked, but you can check none or hit the check none button to make sure that you're not going to print anything, and then hit next. This software has this internal accounting review which will search the company for common mistakes, and it's a good idea to investigate that in practice, but for our purposes we're not going to go through that. We're just going to hit next. So on the next screen it's asking us to back up the data. This is required. We can't even hit next until we do that, and this is important because if we end up making a mistake in the year that we're closing and we don't have a backup of it, it can be very difficult to correct the mistake afterward, in that we don't get access to the transaction entry screens to make the corrections. We actually have to use the general journal and make a correcting entry through there. So it's just not the great way to make corrections after the fact. So we're going to do this backup and hit the backup button. And if you're using your own computer or a loaner laptop, the first thing you want to do is make sure you save this backup to either downloads or desktop or documents, wherever you've been saving stuff to that's easy for you to find. If you're using the virtual environment, make sure to save the backups to the J drive, and give the backup an appropriate name, like the company name, and then maybe the chapter it came from, and then prior to closing or something like that. It could be the description. The book probably gives a better description there, but just label it appropriately. And I'm going to do that real quick here, and I'm just going to save it to the desktop. I'm going to go with the default name, but please use a name that makes a little bit more sense than the today's date. It gives me a warning about how much space it takes, and now the backup's being made. All right, so now the backup has been made. I can click the next button to move on. Once it closes out the fiscal year, I do want the system to move to the next fiscal year, so I'm going to leave that checked and hit next. It's giving a confirmation of everything that's happening here. We're closing out this year and moving into this year. We're going to hit next. And then lastly, we're going to click the begin close to do the process. We got a confirmation here. Congratulations that the closing worked. So we're going to hit finish. And now what we're going to do is run our reports and forms again. We're going to look at our trial balance now. So I'm going to the general ledger group, and then I'm selecting the general ledger trial balance. I'm double clicking on that, and what you should see here is that your trial balance no longer has any temporary accounts in it. So no drawing account, no revenue accounts, no expense accounts. It's just a short list of assets, liability, and permanent equity accounts. And the two totals should be matching. In fact, if they don't match, it's a glitch with the system. And I actually have seen that a few times with students where the closing didn't work properly. It was a glitch with the software. And if that happens, I have some instructions in the course resources area to run a little support utility inside of the software to fix that. But that should balance. You should be able to check your figures against mine that you see on screen and make sure that they all match up. Once they do, make sure to make a PDF, name it accordingly. This is a post-closing trial balance, post meaning after closing trial balance. Save it to your system. You're going to submit it as part of your Chapter 11 submissions. So that's a lot in this chapter. We went through 2 months of transactions, prepared bank recs for both of those months, entered adjusting entries, ran some financial statements, our adjusted trial balance. Then we closed the fiscal year, created a backup before we did that. And now we're running this post-closing trial balance. So we've completed the accounting cycle for this designer company. Now it's your turn to go through a similar set of steps in the end of chapter exercises in chapter 11. Before you do anything, make sure you switch over to that correct company. You're switching over to your Crafts by Your Name company, and you're going to basically do the same thing. Enter 2 months worth of transactions, do 2 bank reconciliations, prepare adjusting entries, prepare reports, close the fiscal year, and prepare the post-closing trial balance and submit it. If you need help, if you have any questions at all, please reach out. Give yourself some time this week though, because this video took a while, and you're going to have just as much time in your crafts company as well.